London, AIM and Toronto-listed SDX Energy has recently been very busy with the drill bits. Its efforts have focused in Morocco and Egypt. It's announced a lot of news recently, the latest being a gas discovery in Egypt. Paul Welch is President and Chief Executive of SDX. He joins us now with some more. I want to get on to some specific news in just a minute, but just first of all, an overview on how healthy the company is at the moment.
So I think we're in pretty good shape. You know, we produce about 4,000 barrels a day now, 3,000 in Egypt and 1,000 barrels a day in Morocco, barrel equivalent because it's primarily gas. We have, $30 million in cash. We're generating about $3.5 million in revenue per month, and we have no debt. So I think from a health standpoint, we're probably as healthy as we've ever been. And again, with the growth we've seen recently, primarily with the drill bit, I think we're well placed to grow into the future as well.
And you see that sort of activity continuing despite the fact you're now, almost at 4,000 barrels of oil a day?
Yeah, we definitely do, because in the two places we picked up, one asset we picked up from Circle, an acquisition we did in January 2010 that hadn't been invested in a long time. And then the other asset that we're putting a lot of money into, a lot of effort into, is a significant gas discovery we had up in the Nile Delta. And so that has a tremendous amount of running room, between 1 and 2 TCF type. So we do see lots of running room. Yeah.
Let's get up to speed now with this latest announcement in Egypt and the discovery you've had there. I think this is the second drill you've gone to this area, is that right?
It's the second one. So back in April 2017, we made the initial discovery, the SD1X, and it was in a kind of a 4-way dip close structure. We told the market what we thought it looked like, how big it is. We also told the market that we expected it to, increase in thickness as we got away from the crest, which I can say our reserve auditors didn't believe. But we did drill off the crest, and lo and behold, we were right. So what we see is the seismic in this area is very accurate. So we predict the top of the structure within a foot, the base within a foot, the thickening off the structure we saw. So we had 82 feet of pay in the original well, and we have almost 90 in the second well. So we had a great discovery today. The original well flowed 26 million cubic feet a day on test. This well we expect to flow closer to 30 to 35, and so combined, 2 wells is going to produce 50 million cubic feet a day, and that's what we intend to put on at the end of 2018. So this is when the development is going to start. So from the 2 wells that we already have, doesn't count another discovery in the next development well we're going to drill, we have already met the potential for this facility. So
how much of this do you own?
55%. We're 55% and key to this, an operator as well. So that allows us to control the pace of development, and our pace is quite rapid.
What else you got cooking in Egypt at the moment?
So in Egypt, we made another series of discoveries in our Masada asset. So Masada is an Eastern Desert oil producing asset. It was kind of a relatively mature when we picked it up, but it had a water flood implemented in it. It had some pump issues. So we've changed a lot of those things. We've taken the production here from 3,000 barrels a day. For a portion of this year, we're making 5,500. We've had a number of discoveries in a new part of the concession up to the northeast, and called the Rabble area. And so we've drilled 4 successful wells, and we have 1 more to go up in that area. And these wells, they produce 20 API. They have about 150 feet of Darcy quality sandstone. So even though the crude is heavy, it still produces like crazy. Also in Masada, we're going to drill 2 additional wells this year in infill, the last couple infill locations close to the lease line. And so we expect to see production significantly ramp up in 2018 in Masada.
And how much more production are you expecting then in total from Egypt?
So corporately, and this is a bold statement, but we said it, corporately we started the year at 3,500 barrels a day, and we expect to exit net 8,000.
Wow.
A doubling of our production. Okay. And we're on track to do that for sure.
I'm going to ask you whether or not that's priced in the share price in just a minute, but I want to talk about Morocco first of all, because obviously that is as well an important area for you.
It is. Yeah, so Morocco we picked up in January 2017. It was part of the Circle Oil acquisition. We bought it from the receiver. They didn't have the ability to invest in that asset for a number of years. So we've come in, kind of really breathed some life into this asset. The interesting thing about this asset is that we own the gas from the subsurface through to the burner tip. So we have fields, wells in the field, then we have a 55-kilometer pipeline, and we have customers in the city of Kenitra where we sell our gas. So that allows us to control the entire value chain. Also in Morocco, you pay no royalty and no tax. So we produce gas for about 50 cents an MCF, and we sell it for $10.50. And we pay no royalty and no tax, right? Now, the only issue we have is that we're not producing enough of it. We have a pipeline that's capable of handling 24 million cubic feet a day, and we're currently only selling 6. Now, by the end of 2018, we're going to take that up to 8 to 10, and the idea being to fully fill up the pipeline by 2020. So we started this project called Project 24 with the state, which is Project 24 in my poor French, and that is the plan with them, is over the next couple of years. This year 8 to 10, next year about 16, and then the following year about 24. That's the plan at the moment. We've identified that potential, in the blocks that we have, but this is kind of unusual for, I would say, the business in that we're drilling wells for about 1 to 2 BCF of gas, and that's it, and it's a small volume. Now, we found other structures here recently that have between 5 and 10, but normally it's for that small volume, which is would be difficult to make profitable if it wasn't for the gas price being so high.
If we take a look at the share price, what are you saying to investors about the investment potential here? And clearly you mentioned that the Circle deal was probably a company-making point, wasn't it, really? That was a big change.
Yeah, so if you look at the share price performance, it really took a step change there, and then I think the next step change is when we made the initial discovery in South Tesuque. If you look on our website, we have a presentation there, and we view that unrisked, we have about $650 million of value in the company, and we're currently trading at below 200 US. So that's where we see the value, and this comes from 2 areas. South Tesuque, where we see between 1 and 2 TCF of gas, and in Morocco, where we see the ability to 4x our existing production. So those are the 2 areas that we see. Now, we can't rule out some other potential acquisitions because there's always people that are looking to exit and find interesting things. So that's part of the story as well. But I think at the moment, the real value is going to come from the organic growth that we can point to. We can see, look, we're making successful discoveries in South Tesuque, and we're also having a tremendous amount of growth in Morocco. So that's where we see the growth in the near term, anyway.
So going back to that question about what's priced in at the current levels, I mean, you've alluded to that in a couple of statements you've just made there. What do you see as a fair representation of the share price based on what you are producing and what your plans are now for the next 8 to 10, 12 months or so?
Well, I think if the share price doubled, I think we'd be closer to a decent valuation for our NAV. We'd have to have a few more discoveries for it to grow much more than that, but I think a doubling in the share price would be reasonable, because again, we're doubling production. Doubling the share price isn't much of a stretch.
No, what is it then that gives a resistance, I suppose, for some investors wanting to get into the stock? I mean, you talked a little bit about the nice well-oiled wheels in Morocco.
Yep.
In Egypt, is it a little bit more difficult? Are the relations with the authorities a little bit more strained?
They used to be. Up until, I would say, November 2016, there was a big change. 2 things happened. The IMF implemented this support program, and it asked the authority, well, they basically told the authority to devalue their currency. And when they did that, then the IMF supported them. We had a reasonable currency, so if we got paid in Egyptian pounds or US dollars, it didn't matter. And Sisi, from the time he's been in power, when he came to power, he owed the IOC $7 billion, and now it's slightly above 2. So it's really significantly improving. And also with, I would say, the suffering and the pain that the Egyptians have gone through, coming out the backside of that now, we're seeing a far greater growth in the economy, and also we're seeing Egypt develop as kind of a gas hub. So we're seeing, molecules of gas coming in either through from other countries or through FRSUs, LNG, and then we're seeing domestic developments like Zohr, West Nile Delta, and ours, and then we're seeing the potential to export it through 2 idle facilities. So you're seeing the development of that business as a regional hub, which I think is important.
Yeah. Okay. So just going back very briefly to where you see yourself at the end of this year, broadly speaking.
Well, broadly speaking, I see us our cash position about where we stand, producing about 8,000 barrels a day, and the share price wherever your viewers think it should be.
Yeah. Okay, Paul. All right. Look, it's a pleasure. Thanks indeed for dropping by and spending some time with us here at IG. That's Paul Welsh. He's President and Chief Executive of SDX Energy. Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.